Hey guys, I am super happy to once again being joined by Lynette Zang. You can find her at LynetteZang.com. In my opinion, she's about the greatest economist out there that really understands and sees through a lot of the BS that's going out there. I'm not a financial advisor. Lynette, I just want to say, first and foremost, thank you so much for coming on the show again today.
Oh, I'm very happy to be here. Thank you so much. I appreciate it.
For sure. And I think it is really interesting. I kind of stumbled onto you as you were talking about some things around gold and some things around bricks. And I think that, to me, really understanding more about gold and understanding more about why it's such a big deal that countries like China are storing up on it and getting rid of, of U.S. Treasury bonds and dollars and things like that is so significant. We're seeing a big shift in the world right now. And I want to get to that. I want to talk to bricks. But I feel like the very first thing, the hottest topic of the day here are the historic, interest rate cuts that we got because, this is the Fed pivot. We only get pivots, every once in a while. And there's been this narrative that when we get pivots, that it seems to have been bearish for the stock market or for other things. And I just want to get your opinion on the rate cut. Like, do you see us now going kind of into a recession, or do you think they're going to fake that normal soft landing?
First of all, there is no such thing as a normal soft landing since it's never, ever, 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 ever been done before. But okay, maybe this time is different. No, I don't see a soft landing. Actually, I see an extraordinarily hard landing into a hyperinflationary depression, which data is indicating. So here's my technical neck on the line that we have already begun to enter. And this Fed pivot, well, they're saying that it's because of the jobs market, which they pushed into recession. And they're saying, oh, look at how strong this job market is. But people are very uncomfortable. So I don't think that we have as strong a labor market as the government and the central bankers want us to think.
Could I interject? I want to ask you one question. We recently brought up a story. Then you don't hear this talked about a lot, but it always happens, where they actually doctored 1 million jobs. They on the jobs report for last year, for 2024, I think it was, up to date, they had to remove 800,000 new jobs that they said existed that didn't exist. And this is kind of the way that they play with the numbers, and this is how they do the fake economy. So I wanted to what are your thoughts on that?
Oh, absolutely. I'm really glad that you brought that up, because that didn't happen all that long ago. Right. And understand that, I really hate to say this because I don't think it should be this way, but the government's and the central banker's job is to lie. And when they're done lying, they're lying some more, because they have to keep you sucked into the system. And their program is called perception management, which is managing how you perceive things and therefore how you move through them, it really is a way to get you to volunteer your wealth and your work, your time, your labor, without you realizing that that's what you're doing. So yeah, to your point, do you believe any of this garbage that the government puts out in their statistics?
Well, it's interesting that almost to a person, if you went across the United States and you asked people individually, you said, do you trust politicians? It's going to be like 90% no. But what's funny is, it's so interesting when you talk to people who are interested in politics. If you ask them, you say, hey, do you believe politicians are honest? They're going to say no. And then you say, well, what about that one that you represent? Is he honest? Or what about the ones that you vote for? Are they honest? Oh, well, those guys, they line up with what I believe. So those people are honest. And that's how they trick people. Like, none of the people believe. It's all BS. All the politicians are BS. And if you have some of them that are good, that care, that want to do something positive, they're going to get eaten up by the system in one term. And I think that's what people just have to understand. It is all fake. The way the government works is fake, and they just lie. And it's just so funny that we know politicians are dishonest, but yet the majority of Americans are brainwashed and manipulated and controlled by the things that these same politicians they don't believe tell them.
Exactly. But to your point too, I think that is changing. And I'm watching it like with the dock strikers, the dock strike that's going on right now, which basically shut down the entire eastern seaboard and the Gulf of Mexico, that's the unions coming together. That's people coming together in community and saying no and giving pushback. Of course, more inflation will be blamed on that, right? But the real reason why we have this inflation is quite simply because central bankers and governments can't stop doing that. And every time they do that, the value of this goes down. And so then the dock workers are asking for more money because they can't maintain their standard of living. Duh.
Yeah, it is really amazing when you break it down. And I wanted a stat I actually read on my show today that really surprised me. And I'll just tell you, Lynette, there's a guy I talked to. His name's Mr. X. He's very high up, and he tells me a lot of stuff. And he's actually the one that pointed out the 800,000 jobs to me. And he talks about a lot of this. And I think when, we've been talking about kind of what is coming for the future and the dollar, he definitely thinks that the economy since 2008 has basically just been fake. It's all been fake since 2008.
I'm right.
Yeah, we did too much. And that's why right now things that make sense don't seem to actually make sense, right? Like why were the inflation, like the inflation, the jobs, they just seem to be so mismatched according to normal things. And they're always trying to continue to make things look normal, but they're having kind of a harder and harder time doing that. And so when I asked him the question, I said, Mr. X, when do you believe that when are they going to turn the money printing back on? When is quantitative easing? When is it coming back? Like basically, when are they printing money? He said, who told you they ever stopped?
Thank you. That's exactly where I was.
Who told you they ever stopped? And I saw some evidence of that today with a number that I found very interesting. I can't remember how, I want to say it's in the last few years. It might've been in the last year. The world economy that includes the Eurozone, America, Japan, and I think China, it went up like $9 trillion this year, like a 10% increase.
In the GDP?
Yes, I think it was the GDP of all four. It was zones. It wasn't like specific countries necessarily. It was a bunch of zones put together. And, it was like, it wasn't the GDP. It wasn't the GDP. It was the value of their cash money. The value of cash money in these countries, it grew like $9 trillion. Incoming crisis, global money supply surges to near $90 trillion as geopolitical tensions rise. The total money supply in the United States, the Eurozone, Japan, and China has for the first time in history reached 89.7 trillion, having skyrocketed by a whopping 7.3 trillion over the last year. And what's so crazy about this, all of the money is flowing, all the value is flowing out of these countries except for China. It's flowing out of the United States, out of the Eurozone, and out of Japan into China and BRICS nations. And it seems like to me, this is worldwide money printing. They're not getting value from other countries. So over the last year, they added like 8% to the total money supply in these four important countries and zones. Like if they slow down here, they're speeding up somewhere else. They've got to keep the Ponzi expanding at all times.
Well, it's really interesting that you bring this up because so much of the GDP, the growth that they tout is just inflation.
Yeah.
Because if you've got to buy that banana and it costs you $20, well, there you go. It goes into the GDP. They're going to say no. But every time, and that's what I'm talking about, this is all they have is just this money printing. That's all they have. And every time they do that, the value, the purchasing power value of what's already out there goes down. And the standard of living for people also goes down. And that's what makes having gold and silver that important, because this is sound money.
Yeah.
This is debt money. That's sound money. It is not a big surprise. And what I wanted to point out, if you go on the Federal Reserve Education Department, the FRED, which is like one of my very favorite websites, and you put in there financial conditions in the search bar, what you're going to see is that through this whole tightening cycle, which is garbage, I'm 100% in agreement with Mr. X, that money conditions never got hard. They never got tight. And this is the first time that a central bank has eased into already extraordinarily loose monetary conditions, which is why when they were tightening, we didn't see the stock market implode. We saw more and more and more speculation. It's all of this easy money. So what does that tell you, right? They're easing into already extremely historically close to the easiest levels ever. There's your hyperinflation. Inflation is going to come back with a huge vengeance and then some in the US.